Sayan Mukherjee is now with us, head of India Equity Research at Nomura. Sayan, good morning. Great to have you with us here. Happy festivities, happy Dhanteras and Diwali to you and your team at Nomura and your loved ones as well. Thanks for joining us this morning. I trust you heard Ekta's crisp explanation of course, what the preview set looks like. What stands out to you? What's the broad sort of overlay as you look at these earnings, analyze these numbers in the space, Sayan?
Thanks, Prashad, and happy Diwali to you, your team, and the viewers. This quarter is a bit unique, I would say, in the sense that there's just too much of volatility and disturbances, if I may say so. So the numbers per se may not really convey much. And I think people would sort of look forward to some of the expectations, which Ekta had outlined. I think the key issues that we would be dealing in this quarter is slowdown in India because of the implementation of GST. Many of the large companies tend to book their sales a few days before the end of the quarter. And to that extent, since the GST got implemented towards the end of September, one could expect meaningful slowdown, I would say, in the month of September, which will sort of get reflected in this quarter. But that should reverse as we go into the next quarter. And the other issue is around generic Revlimid in the US. Most of these large Indian companies, they have contribution from Revlimid, which is now coming to the fag end of the exclusivity period. And therefore, we should brace for some decline. And I think most importantly, what it means, because generally the street believes that Revlimid is a very high margin product. And if that starts to decline, you could see that manifesting into margins, lower margins. So I think that would be the key to watch out for as far as this quarter is concerned. But as I said, it's a transitory quarter, and a lot will depend on what the guidance, or the company talks about the future Q3 and Q4.
All right. Hi, Sayan. Good to have you on the show. This is Nigel on this side. I was just recalling what you said in our earlier chat in January, and it seems, you're pretty much on the money. And I say this because you were saying be very stock selective. On the Nifty, maybe, low single-digit returns is what you're going to be looking forward to. Consumption could get a boost. That has well happened. And the last point I think you made was focus on some of these, quick commerce plays and, some of these platform plays. And they as well have done well. So you've had a good track record this year. But from here on, what do you feel about the markets? You've gone through a bit of a time-wise correction. We have lagged our peers, emerging market peers, the global market party, and most of the asset classes as well. Do you think with the fiscal, monetary policy support that we have got, maybe things look up from here on? Earnings as well could pick up.
Yeah, absolutely. I think, late last year, I guess, given the valuation and the growth headwinds, I think that was probably easier call. Now, of course, a year has passed and India has underperformed. I think we should see some improvement definitely in the third quarter, driven by consumption, the GST cut, and there are other factors as well, right? The inflation is low. We have seen, monetary stimulus being unveiled. So we should be, seeing traction in consumption. I think that's something which probably the market has already started to factor in a meaningful way. I think the key would be the sustainability of that strength going beyond the festive season. How much of that strength continues and whether it sort of kickstarts a stronger economic cycle. I think that is still not very certain in the backdrop of several uncertainties, particularly on the global front, that we continue to face. And unfortunately, things haven't really settled down yet, and we still are grappling with significant amount of uncertainties from the global side.
Sayan, well, I'm just going to toss it back to the conversation on pharma, and I'm going to ask you about what your thoughts are with regards to what's taking place in the US now when it comes to this entire tariff situation. The branded pharma drugs seem to probably be more impacted. We've heard positive noises that, the generic pharma is probably unscathed at this point in time. Do you think that Indian pharma is now out of the woods?
So we can't say it's completely out of the woods, but I will be in the camp that it would be difficult for the generic companies to be tariffed, at least at a very high level. And if you see incrementally, the noise that has come from the US does suggest and give us confidence. I think there is statement suggesting that the Section 232 investigation is not thinking about tariff on on generic pharmaceuticals. That's one. The Trump administration has talked about strategic reserves and also giving some sort of priority for filings which are done out of the US. I think the broad objective here seems to be there is today a over dependence on imports as far as pharmaceuticals is concerned. If they can get some bit of an ecosystem established, that's enough. I mean, it's very difficult for generic manufacturing in large scale to move to the US. And actually, Indian companies does add significant value because of cost, quality, and therefore I don't think the US would like to completely create or try to sort of completely change that, particularly in a complex sector like pharma where it takes years to establish supply chain. So I am getting more constructive as far as generic pharma space is concerned from a tariff perspective. As far as brand, as you said, yes, I think that's a little bit more challenging. But most of the Indian companies, except for Sun, who has presence on the branded sides, most don't have. And I think going forward, the fact that the US is talking about lowering drug prices in the US, and probably we'll see an increase in prices in Europe. So that also changes the geographic dynamics as far as branded medicines are concerned.
Okay. What is your opinion on, the entire CDMO space? Do you think that's, a space you would be interested in, something that you're recommending to your clients as maybe a longer-term beneficiary of, say, the China Plus One?
See, CDMO theme, I think there is definitely a truth to the narrative. I think people are looking at diversification, whether, you have a Biosecure Act in some form or the other. But I think, the companies in general, the innovator companies are looking at alternatives, and India is clearly a beneficiary of that. Now, I think, like in many pockets of the market, I think the narrative is very strong, and that's already reflected in the stock prices and very high valuations for many of these stocks. And and therefore, we may not really see immediate returns here. And many of the companies would have to go through an investment phase, whether it is in technology, whether it is in manufacturing setup, so that we can really compete with China effectively. And I think we would see a significant amount of investment in the space. From a long-term perspective, if you're thinking 5 years as a horizon, I think this space does provide a lot of opportunities because there are many small companies which can scale up quite rapidly. But in the very short term, in the near term, given the run-up in the stocks and valuations, one may not expect a lot of return immediately.
Sayan, thank you very much for that. Ekta, thank you very much for taking us through that conversation as well. Really appreciate